So first of all, it started off by being our tagline from the very beginning has been the investor we wish we had. And it's because we've all of us been former founders and active operators and all that, bridging the roles or bridging the gap between a VC and the founder. Then later on, we found out, okay, if we are only investing relatively small amounts per round instead of a lot of money per round, then it sort of makes sense because there's always room for us in a round. It's not like that we are pushing out another large VC. So with that in mind, we set out to make a small venture fund, so a micro VC, you would probably call it.
How do you think about follow-on investing as a smaller fund?
The follow-on, double down on your winners, school of thought. And then there's the don't put your good money after your bad money and just double down on the losers by chance. Helping startups grow is probably more important than ever in terms of, especially from a European perspective, with strategic autonomy and all the geopolitics going on. I think we need to be stronger in our own right and having a large risk-willing capital setup that can help new technologies grow and prosper. I think that's extremely important. So I see it as probably more important than ever.
All right, with me today is Steffen Frølund. He recently co-founded Likeminded VC, a new early-stage fund based in Copenhagen, Denmark. Steffen has a background as a founder, operator, politician, and investor, and is now backing the next generation of Nordic startups. Welcome, Steffen.
Thank you so much.
Let's just jump straight into it. Could you give me a quick introduction? What is Likeminded VC, and how would you pitch the fund to a founder who's hearing about it for the first time?
Yeah, so Likeminded grew out of a angel syndicate that we've been running for 3.5 years now, where we started off by being first 3 and then 8 angel investors who pooled our money together and then had this idea that we could have a lot of fun doing it together, and also a third or an eighth of the risk and 3 times or 8 times as much money put together that we could then invest together. And out of that came 23 angel investments across the Nordics. Super proud of that portfolio. It's been developing really well. And late last year, 24, we sort of knew we were going to run out of money. We made the last investment, and then we had a good look into each other's eyes, and we asked ourselves, well, like, what's the next step? And then we decided to do basically through the course of the years, a lot of other angels have knocked on our door and asked, can we do something together? Maybe find a syndicate, or can I join even, and all that. So we had sort of this idea that it might be interesting for other people to join. And both legally and technically and structurally, the right thing to do in that case is to do it as a real venture fund under the Danish FSA. So that's what we did, and we opened that up, and then we've been sort of fundraising for most of spring, and we had closing 2 weeks ago, and now we're a collective of a little bit more than 30 active founders, angel investors, and just people who've been around the block in the predominantly Danish startup ecosystem.
Yeah, because I was thinking the timing of this is very interesting. I mean, it's a tough market. Did you experience this at all, or perhaps that's a great opportunity to start a micro fund?
Well, I think we are timing it completely right in terms of hitting good valuations in the market, and I think we'll make a good portfolio based on the timing. But the time was also a little bit hard on our fundraising efforts, because a lot of the people who said, yeah, sure, I'm going to join, they all of a sudden saw Trump and his tariffs tear down their Tesla shares in value and all that stuff. So there was a lot of people who were like, how much can I commit? Do I want to commit? What's my risk profile? And that's completely fair. We came oversubscribed compared to what we believed we were going to raise. So we're still super happy, and we got a great group of people collected.
Yeah, congrats. It's as you say, it's very interesting timing to get it started now. And is there anything? Did you see any particular gaps in the market? I mean, you've been around for a while. You started your own company. You've been an investor, as you said, in many cool cases. I see we have at least one common investment. Is there any sort of gap that you're trying to address, or any particular opportunity that you see now?
Yeah. So first of all, it started off by being our tagline from the very beginning has been the investor we wish we had, and it's because we've all of us been former founders and active operators and all that stuff in startups. And we've all tried sitting across the table from VCs and understanding what their interests were not always aligned with our own interests. And we decided to see if we could make an investor, first an angel investor, now a VC, where we tried to sit more often, at least, on the founder side of the table in all these negotiations. So we are typically a minority shareholder. We're not going to lead rounds very often. So we are sort of bridging bridging the roles or bridging the gap between a VC and the founder very often. So that's sort of been the idea. Then later on, we found out, okay, if we are only investing relatively small amounts per round instead of a lot of money per round, then it sort of makes sense because there's always room for us in a round. It's not like that we are pushing out another large VC. So the competition for us in terms of getting into cases is more like, do the founders want to, do they like us? Do they trust us? Do they want to include us in the round? It's not so much, do they prefer big venture fund A or B? So that type of competition we're not really in. And we wanted to see if we can keep that sort of DNA and that model, because access to the great deals is what we believe is the most fundamental part. And then obviously afterwards helping the companies grow. And with that in mind, we set out to make a small venture fund. So a micro VC, you would probably call it. And we can only do that because none of us in the GP group or the founding members of the group take any salaries. We don't have an office space. We don't have any expense accounts. So there's no management fee. There's only some very, very minute things we can't get around, like accounting and a little fee for the FSA and all that stuff that's included. But it's a very minute management fee, and it makes the model work with a much smaller AUM, much smaller total fund size. And based on that, we can sort of change the strategy in the market, which is we're quite alone in that size in the market. And it means that instead of having to put in, I don't know, 1 million euros into a company as an early stage seed fund, maybe with follow-ons, we can only do, or we can make the model still work with only 200,000 per investment that we do. So it makes this more an open field where we don't have that same type of competition, because we're sort of the only ones in the market catering to that size. What we're competing against is probably more angels, but then it's like, would you rather have, and it's not that many angels in Denmark that put up 200,000 euros in with just one check. Maybe 100,000 euros is sort of the max for them. So would you rather have 30, 35 great angels through Likeminded with those ticket sizes, with professionalism from a VC, but with angel kind of closeness to your company? Or would you rather go out and see if you can find 5 different angels and find them? So it's sort of a play that makes, we've seen that with the cases we've done so far, but also in theory, it should make for an easier access to the great deals.
Yeah, I think it's personally very interesting. And so I've been in the VC game, as you know, and now I'm an angel. And I was speaking to an angel, very prominent angel from Denmark, who said, the good thing is it's very easy to get in on the deals because you're not taking someone else's space. Of course, you have to have some value to add. And it sounds very similar to the idea behind these micro VC funds. Do you also think that we're going to see more micro venture funds in the, I mean, we've seen more angels also as the ecosystems have matured, at least both in Denmark and Norway and Sweden, it's more mature already. Do you think we'll see more of these micro funds like Likeminded?
Yeah, I think there are 2 drivers. I've heard other people who have ambitions of raising larger funds using a small first closing as sort of a micro VC and then just starting investing from that. I think that's an interesting way to just go into the market and proving yourself. So I think that will happen more often as well. And then it's not like Likeminded invented micro VCs. We've just basically taken a model by chance that's already existing so many different places, especially in the US. Typically it's maybe one super angel or one very capable founder who've been able to raise that and does that in the weekend. And that's sort of the same mechanism, but it all changes dramatically when we decided not to, or we never considered having a management fee, but still did the fund structure. And with that in mind, it just opened up for a much smaller fund size and then a much smaller ticket size, which is then a unique position in the market. But in Denmark so far.
Yeah, no, it's, I hope I'm not stepping anyone on their toes, but I don't recall any similar setups in Norway either. But so you all have daytime jobs, or at least the ones I know. How do you manage that? How do you source deals? Is that through network or yeah?
Yeah, absolutely. So yeah, it's right. We don't take a salary, and it's not like we're living on nothing. So we do have jobs on the side, everybody. And as you probably introduced me as, I also do politics on the side. So I'm a member of the Danish Parliament, and that's sort of my primary focus. That's probably 4 days a week that I do that full time. And then that 1 day a week where I'm not doing that, that's my playground, my hobby. That's what I keep my sanity, and that's during the startup investing or talking to founders and all that stuff. That's really where my passion is. So that works for me in terms of how I manage my time. And in terms of how we find the deal flow, it's a combination of different things. Now we're starting to get a lot of inbound requests for just people sending us decks. I think that's quite interesting, but it's not what we necessarily prefer. Our entire model is built up from everybody in the group. Before 8 and now 30, 35 people. They just all of them are close enough to where the innovations happen that we'll just start hearing about stuff going on, and then we'll probably sometimes even reach out to companies we find interesting when we hear about them. So sort of a network, but also outreach network based. We really like when we can have an idea of something we think, okay, this would probably also work in the Danish market. Why haven't we seen that yet? And then a company pops up doing that, because that initial conversation is just like, we've been waiting for you guys to open this shop. And we know a lot about the structure of the business. We might even have some insight that they haven't seen. And this just, it's a warmer than warm intro.
Yeah, that makes sense. And how do you think about follow-on investing as a smaller fund? Do you do that? Do you reserve capital to double down, or do you rather only invest sort of once?
Yeah, so in my opinion, there are two different schools where the math works in both school. And then there's the follow-on, double down on your winners school of thought. And then there's the don't put your good money after your bad money and just double down on the losers by chance or by coincidence or accident. And I think those two things are sort of like in polar opposites in terms of how they would work. When we run the math on what's actually the graduation rates between the different stages from pre-seed, seed, Series A, and upwards, it doesn't seem to me that the aim is not that much better from a venture fund on the next rounds. It's just another risk-reward profile. So the companies are also more expensive, and you also put in probably also larger amounts as you progress. But there's still a drop-off rate or a rate that you need to go before you graduate to the next rounds and all that stuff. When we run those math, then it still makes sense for us to do this one-time early stage investment of around 200,000 euros, and we don't do follow-ons on that. It's sort of a strategy we have across the board for all companies. So it's an easy sort of discussion we have with them. We will love to help them raise the next round and use our introductions to our network of VCs and all that stuff. There's no problem with that. And if we do take on follow-on rights, which we typically have in most of the agreements, we send that upwards into the network. So all of the LPs in our group, they then sort of fight for the right to be the one selected to come in with more money if they like it. So in a way, the companies, they're not struggling for cash just because they take us on. There's enough cash in it. But from the isolated fund structure, we are happy to not do follow-ons. Also, we don't have that much cash reserved for each company because we're a smaller fund, of course. So we don't need to do it to deploy all the capital. So that's one logic. And the other logic is obviously that we are not necessarily much more certain in the seed round that comes after our pre-seed round or the Series A round. This is actually going to be a winner. So we'd rather have somebody with much higher conviction than us take that risk, and we'll just be the pre-seed or seed stage risk taker for that amount of money.
Does that also mean, do you have strong ties already or plan to do with some of the existing or larger funds? I mean, they would always be looking for the angels and the scouts, if you will. And if you're pre-seed, I assume you would be an interesting partner for many of these.
Yeah, this also feeds back to the situation in terms of competition. We're not really a threat because we don't push the larger funds out, and we're not a threat also in the follow-on rounds. So in a sense, they really like to work with us. That's our experience because we're sort of professional in our approach. We don't have all these weird demands. We're quite fast moving. So I think we're an easy add-on to the rounds where they know, okay, they've got some expertise and a lot of great people who can help the startup. They're looking for that. But also that we don't seek to push them out of future rounds. They can get their target ownership aims fulfilled, and we'll sort of back off gradually, and even maybe a couple of rounds down the line be inclined to also to sell our own stakes if the opportunities are right.
And I guess sort of connecting that to the next question, which is there's been a lot of talk about the traditional VC model being dead. At least my LinkedIn feed has been spammed about this recently. The old playbook of raising large funds and pushing for rapid growth and relying on follow-on capital and then aiming for IPOs has changed, or at least is under pressure. Founders are staying leaner, less exits, more cautious LPs. How do you think about this shift? And has that also affected, I guess you touched upon it earlier, but has that also affected sort of your approach to establishing a micro VC like Likeminded?
Yeah, I think it's a market dynamic that sort of plays into our hands. I think it's a good position to be a smaller venture fund. I think it's probably even the larger, it's more difficult to get the marginal use of your funds and the marginal returns right and large enough for it to make sense. Obviously, you can have these great outlier funds if you're an Andreessen Horowitz or a Sequoia or whatever. Then obviously that would work. But I think there's a lot of funds being squeezed in the middle in terms of this mid to large size, where it's really difficult for them to get the right amount of deal flow and put enough money to work into the right winners and all that stuff. I think that's probably their biggest headache. So I don't know if I would join the chorus saying that the VC model is dead. I think quite contrary. I think risk-willing finance and early stage investing and helping startups grow is probably more important than ever in terms of, especially from a European perspective, with strategic autonomy and all the geopolitics going on. I think we need to be stronger in our own right, and having a large risk-willing capital setup that can help new technologies grow and prosper. I think that's extremely important. So I see it as probably more important than ever, and also thus a good market opportunity. So I don't think it's dead, but I think the dynamics in the market is changing, and it probably more difficult to be a large fund.
And you focus on the Nordics, right? You're based in Copenhagen. How do you plan to source deals from the other parts of the Nordics?
Yeah, well, it's always a network game in the end. And also, obviously, even though we're 3 or 4 Scandinavian Nordic countries, we are still different countries with different networks groups. And obviously, it's a little bit more, it's different to invest in a Swedish or a Norwegian company for a Dane, and vice versa. It's also difficult for a Norwegian to take on a Danish investor. You probably just have more trust with the local guys if they show up. So that's already some minuses we need to overcome. I mean, luckily in the angel syndicate that we just left, the previous portfolio, we do have 2 or 3 Norwegian investments, free Norwegian investments, and that has sort of been the first investment, sort of opened the door for the next 2. So there's a lot of just inertia that's just rolling around in the market when we start entering, and then from the network group, there's a lot of people in our LPs that know people in Sweden or Finland very well, and then we get all these additional deal flow coming in that way with the trust established already.
Yeah, because I would say that the value add also in my view is that if you can get someone from one of the other countries, which most of the companies started in the Scandinavia tend to expand throughout Scandinavia. So to have someone on the ground who has the network and understands the market can be a huge value add, right? So it's I think that makes a lot of sense.
Absolutely.
Are there any particular type of companies, any niche focus there? I mean, everything is about AI these days, but there are many other types of companies out there. Do you have any particular focus?
Yeah, I think we're obviously, it should be tech enabled, and like we have a preference for software being the tech that enables stuff. So I think that's sort of the outermost big scope that we have to aim within. We don't go away from hardware. We do have some few things that we look into like that, but I think deep tech and hardware is much more difficult, and it's a different game. It's a longer timeline before you see returns on your investment, and the risks are probably also higher. So we prefer software in different shapes and sizes. But in terms of sectors or industries or which type of software or how it's applied and all that, then we're quite agnostic. And our biggest fear is to have such a strict investment thesis or scope that we would have to say no to the new Facebook or the new Airbnb that just came out of sort of not really being within anybody's investment thesis, but we should be able to say yes when the right thing shows up. Probably the most interesting companies are sort of in between different sectors and bridge different technologies and then apply them to new problems that are sort of in between the cracks. And I think we would hate to be forced to say no to stuff like that. So we have on purpose a very, very broad thesis.
What piques your interest when you meet a new company? If there's something like, oh, this is really what we look for.
I think it's a cliche, but I think you need to see some fire in the eyes of the founders, that they believe what they're doing themselves and they're able to persuade you. I think that's also a good indicator that they can persuade everybody else about the business is a good idea. So it's very much down to the initial minutes or half an hour together with the founder. I think that says a lot of this. It sets the spin on the rest of the storyline and in everything we do from there. Then obviously I need to understand the technology and just understand what's actually going on behind the scenes. It's very difficult for me to fall in love with a company if I don't understand the mechanics. What is it actually that they do and how do they do it? Not that I'm turning around and building it myself. It's just that I need to understand that there's actually a secret sauce or there's something actually working behind the scenes, that it's not just a coincidence that they have some numbers or whatever. And then I think everything from speedy growth to a large market and a convincing story that they can convert their great technology and the fire in the eyes into some business that actually grows. I think that's quite interesting. So often we would have to have some commercial indicators, maybe the first sales or a growth rate over a couple of months or some MRR, ARR coming in or whatever. I think all these things, it depends on the business, what's the right metric to look for commercial indicators, but we need to have some sort of validation from the market that the product is sort of okay. Then we don't mind taking a lot of risk on whether or not it's repeatable and we can make a success out of it. That's our game to help with that, but we need to have some signals.
How do you think about like a moat these days? I mean, with everything, again, changing so fast, and then Google or OpenAI comes out with a new model, and all of a sudden you have a lot of companies, often VC backed, that have to close shop. How, as an investor, how do you think about that, and how do you make sure that you don't pick one of these companies that have to close their doors?
I just had a quite interesting conversation the other day with another VC, and we were just talking about how AI is so commoditized that you could. I think I saw a case story of. It was a DocuSign. I think they spent a couple of years or many years to build their entire tech stack and whatever the users would actually see. And then a couple of guys using only these AI tools to create software, they were able to replicate that in a couple of days. And it just says that moats are very, very difficult in terms of the technical part of it. So I think moats from now on would have to be more focused on network effects, trust, brand. Distribution becomes part of the game again. It's a different ballgame when the tech can be so easily, copied is probably not the right word, but the same type of product can exist in many shapes and sizes quite fast now with the tools being developed, and that just changes the dynamics a lot in the market. So it's not only a good engineer now, it's also a trustworthy storyteller that can actually get that product into the hands of the right people, and then stickiness in terms of network effects or whatever is the moat from there.
It's I have been trying to wrap my head around this because everything changes so fast, and the company I work for now as my day job, Ambi, they work with talent and recruiting and HR, and there's so much software and AI coming out in this space. But what we see is that when we speak to clients and we do a lot of interviews, is that very few companies actually use this because they're overwhelmed. And I was trying to find an analogy, and I think like when Shopify came out with all the apps, it's a bit of the same. People trying to figure out like what do I even choose, because a new tool comes out every day. So to your point about the brand and distribution, I think there's definitely something to that, and I don't think necessarily the best technology will win. Because it's just like being bombarded with people who want to outsource your tech department or whatever, like you get these inbound requests all the time. That's what the buyers are now getting with the software tools. So they're just like shutting off and not having any of the conversations. Yeah. So I think it's like, how do you get through? Even if your software is fantastic, I think that's quite interesting when it's that easy, or not that easy, but it's getting a lot easier to build. So as you say, like distribution and network and brand, I think will be super, super important in the time to come.
And it's not just the ability to put up an ad and just shout louder about your own company, that it just turns into an Egyptian bazaar. Like, it's just overwhelming, and you end up, or I do, not buying anything, right? Yeah. You just have to move quickly past because it's just so noisy and you can't make any decisions. You're just overwhelmed, and you're what's it called, the paralysis by analysis. You just jump away from it and you just don't do any decisions. So it's not just a distribution and marketing game with 200 different vendors of the same type of software. You need to have something more. And what is that more? That's sort of the secret sauce in the distribution, or the trust, or the thing that distinguishes you, or the storytelling, or the person behind, which can't be copied. I think you probably see more founder-led stories, like in Denmark, it's quite famous with the FCK, the large football club in Copenhagen, that they were for many years run by a very eccentric guy that everybody knows. He was sort of the brand, and the brand was sort of him. And that's, I think you'd see more stories like that.
And this is also seems that way on LinkedIn, that more people are taking, or the founders are taking more of that sort of storytelling as well, because it's all about them. Or it's not all about them, but it's very much about them as well. Yeah. Is there anything, now you've raised the fund, but you have been in the game, as I said, for quite some time. Is there anything you believed about venture and starting your own fund that you now see differently? I mean, you just launched the fund, I know that, but is there anything that you might view differently?
Oh, that's a good question. There are many things you learn by doing it, of course, and it's the first time we've run through the legal minefield of trying to set up a fund in Denmark, an FSA regulated fund, and obviously that is a different ballgame in terms of what can you say to who, when, what's the right order of things, the legal fees, all that stuff. So, but now we've sort of came through that minefield, and now we have a path, and we sort of believe, okay, that worked. And also, maybe for the first time in Denmark, with that type of quite small fund size, it still worked, and we could also press the legal fees quite far down. A lot of things changed when you sort of changed the management fee structure, and I think that was a big learning, that you don't have to put a management fee in. If you don't do that, then the complexity of what you're trying to do also is reduced a lot.
I guess I was speaking with an angel friend about the whole concept, and I guess people, and that's what he was saying as well, that LPs have gotten much more cautious in recent years, especially because the market has changed quite a lot, right? So that management fee actually is something people are starting to evaluate a lot more. It's like, how would that affect the average return I can get and all of this? So I think that makes a lot of sense. And I'm curious to see in the coming years if we will have more models like that. And then, of course, a lot of questions, because you said you're a politician, which is, of course, a very important job. And I know your colleagues also have very important jobs. But I also know how much time it takes to find the good cases and to have various discussions with them. It might also be you've all been operators, so to be hands-on with the investments you have done. I'm curious to see how it's going to play out in terms of time. But perhaps that's also where you tend to use some of the LPs, or not to give you the answers here, but I'm curious how you think about this, because I can easily see it being a time constraint.
Yeah, but you're looking in the right direction. Is obviously this model that we're building is only as strong as the LP group is willing to and capable of leaning in and helping. Mm-hmm. So that's been a crucial factor for us when deciding who to take on and who we reached out to. Obviously, people who know what they talk about, are willing and indicate they're willing to help the companies when we invest in them. They all have different domain expertise. So if we invest in sector A, then obviously the expert from sector A will be the person that we would like to have helping the company. Also, that's also how we do, obviously, the deal sourcing. We talked about that a little bit, how we find deals also through our network, through our LPs, typically. But it's the most different thing, I think, that's worth mentioning, is that we sit down, every time we do an investment decision, we sit down 4 people. We open up a due diligence or deal group, as we call them, with 4 people. So 2 from the GP group and 2 from the LP group. And that little committee is actually free to make an informed decision and make an investment on their own. So they have their own right to go and seek out all the information, do their own due diligence, ask experts, whatever they need to do to feel comfortable that this is an investment they want to make. So also the investment decisions and a lot of the work related to making an investment decision is also decentralized and outsourced to the LP group a little bit, which obviously is fundamentally important for us to be able to have enough hours in the week.
Is there any mistake you made or hard lessons you've already run into building the fund? Or it could also be as an angel investor, because again, you've had the consortium for some years. It could be an investment decisions or anything you just got plain wrong.
Well, I can start off by some of the mistakes that led to us starting Likeminded in the first place. And I think that's where we were just individual angel investors. And I think we had sort of a common understanding. Like none of us had enough money to build an entire portfolio of angel investments. We were just drawn to the startup atmosphere. That's where we came from. We know technology can be really a big factor of change in society, and that was really interesting. So I made a couple of angel investments, and the one I was completely certain was going to be a hit, I also worked for a while, and that turned out not to be a hit. And the one that I was maybe a little bit more cautious about, and it changed the strategic direction a little bit away from what I was proposing myself, that turned out to be a great hit. So I was very humbled by the fact that, okay, maybe a small portfolio is something you can put a lot of your love and passion into, but it's probably not the best investment strategy. There's just too much risk going on, and maybe I'm not the genius that I thought I was in terms of choosing the right companies. So what really works is to have a portfolio. You need to have a broad sweep of all these different investments for it to sort of level out and to get the returns on investment on this as an asset class. There are too many angels that just do a couple of investments and then both of them are free fall in a row, and then you just come empty-handed back, and it wasn't really fun. Maybe it was like being a member of a golf club. It was fun, but you lost a lot of money on the way. That can be fine. But this has this added thing if you want to have a return on your investment. And I think this portfolio logic was something that sort of dawned on me, and was sort of the reason why we were 3 people who joined forces, just to make that pie a little bit bigger and the risk 1/3, and then up to 8 people, and now even with 35 people. And I think that's important to think about as an angel or as an early stage investor, is to get the portfolio structure right, to just lean into the luck, where luck has a large surface area to land on, instead of having a very, very small place where luck can land, and then you just end up with an empty hand in the end.
I think just when you describe the structure and the setup, you said it earlier to the question about whether we will see more of these type of micro funds. I'm curious to see again, as I know many funds struggle to raise these days, whether that will also lead to some establishing micro funds by necessity in the coming years.
Yeah, I think that's true. I've seen the first living example of a larger ambition being tuned down to a first close that just starts off as, maybe can we prove what we're doing is right, and then we'll raise more later on in a second fund or a second close, depending on the timing of everything. So I think that's partially from necessity, but also partially from just being clever and getting into the water and see what happens.
Steffen, so you work as a politician, and obviously politics also have a big role to play when we talk about the startup ecosystem. We were discussing it maybe before we were recording, but we were discussing how politics play in at least both in Denmark and Norway. And in many cases, unfortunately, not to the favor of the entrepreneurs and the startups. It's a real shame. How do you see this? Your experiences with Likeminded VC and being in the ecosystem, is that something you also take into your role as a politician? And if so, how?
Yeah, definitely. Obviously, there's always the risk of a conflict of interest. So I'm very aware of not stepping into arenas where we'll just specifically help one of my or our portfolio companies. So then I'll just hand that task over. So I think that's one thing to be very cautious about and try to play fair ball. But that being said, it's I think I mentioned it as being the place where I have my hobby or my sanity check, is to jump outside of politics and get back into the real world and do something with startups. And that's just for my own personal benefit. That's really important for me to keep the steam up. But there's so much that I learned from, like, what are the hands-on problems, like how does it work with employee warrants? Now we have a problem with some sort of unrealized capital gain tax when we IPO. All these things are hard to understand and see if you're not at least close enough to understand what's going on. I can see some of my political colleagues from other parties that don't have that background. They just have no clue what we're talking about. And coming up soon, we'll also change the legislation on how we tax crypto assets in Denmark. And I think that's also been something where the logic have been applied has been more like what would be nice for the tax authorities rather than what actually fits the technology. And then obviously a lot of people have been hurt on that journey. And I think it just helps a little bit to be hands-on and understand what's going on in the technological space for different reasons. And that obviously makes me quite good at that part. Then I'm not really good at what's going on in schools and kindergartens or in the health sector or something like that. And then there's other politicians who are much more into what's happening in those sectors than I am. So it's partially interest and partially hobbies and partially just you have a domain that you sort of can be your expert in.
Good to have both, I would say, at least so you have you don't have the I don't know what that's called in English, but the politicians who have only done politics their entire lives, right? So leopolitikere, I think it's.
Yeah, that's the Danish word. Yeah. And there's a lot of those. I think an added benefit is also I can probably take it a little bit more easy. I mean, if that's the only thing you've done your entire life is being a politician, there's a lot of at stake. It's your personality that's getting elected. It's not so much a temporary job. And they don't have much to fall back on, and who would even be willing to use a politician in some other role somewhere if they haven't done anything at all. So they have a lot of risk. So they're also willing to do more and spend more and feel it more in a negative way when something doesn't go their way. And I think should it not work for me next time in politics, right now it's looking good in the polls, but should it not work, then I have something to fall back on that I'm quite happy about. So I think I can take it a little bit more easy than some of my colleagues.
Yeah, I get that. What made you go into politics in the first place? Is that I mean, you started out as a founder, right? And you've been an operator and investor. So was there a eureka moment where you say, I need to do something about the politics in this country, or?
It's sort of always been an interest of mine. I think also the reason why I thought technology and startups was a great forum is that it's sort of a tool for change in a way, and I think politics have that as well. And if you can use those tools as a leverage point to get things in a better direction, and then I think that was always interesting for me. Then I think that being a startup founder, I just understood a lot of the things that stopped my own progress and my own company's progress were often political regulation or things standing in the way. So that was always annoying. And I wasn't afraid of saying that loudly in terms of like writing columns for newspapers for a while or having my own social media profiles where I complain about how they treated Uber in Denmark or whatever it could be. So all these things was always there. Then very practically, I just thought, if you'd asked me at that point, you probably said when I was done doing business, then maybe when I was old, I could think about running for office or whatever. Then I got a phone call from the party leader of the party that I represent and invited me for a cup of coffee. And he just explained to me the strategy and where they were going with the party. And obviously he's a very charismatic and competent guy. So I was easily persuaded to take the coffee and listen. And then I actually ended up saying, no, thank you. I think it's a great offer that you're willing to put me in front in one of the areas of constituents that I could actually get elected. But maybe the timing is not right. I was happy being where I was. I was the CMO at Green Mobility, which is a publicly listed car sharing company in Copenhagen at that point. And I'm not done doing that. And then a couple of months later, the dialogue restarted, and I had actually very down to earth kind of a road trip in the US with my family, car talks with my wife and my kids, like this will be a change, what's in it, what's good and what's bad. And just I came back from that road trip holiday, and I just phoned them up, said, yeah, I'm ready to go. And then by chance, the elections were announced quite early compared to where they were supposed to be had. So I was only, from I said yes to I had to do an election campaign was probably only 1 or 2 months. So it was from a standing start, but it was fun and it worked.
Yeah. It's, I mean, so being both in the startup ecosystem and as a politician, what do you think about Denmark as a startup hub and the ecosystem, like, and where a lot has happened in the last, I would say, 5 to 8 years, but where do you think Denmark is now, and where do you think Denmark in particular has room to grow?
Yeah, so I think Denmark is in a very strong position in terms of the human capital side of what we need for startups. And we have extremely competent people. We have engineers that can build. We have a great tradition for good design and user interfaces. And all these things are really great assets when we need to build large products. We do have a small home market, so we're forced to grow quite early, which is good for our sense of crossing barriers and borders and exporting and being good tradesmen, but it's not so good into a sense of a lot of the companies then also leave Denmark in sort of those stages because they can go to other climates or environments where it's more business friendly for them to be in terms of capital or in terms of regulation. So I think we have a lot going for us, but we also do set up some unnecessary hurdles and tripwires that these companies fall over, and I think we should just remove those, and then we're in the best possible position that we can be in. Capital markets is a really big thing, and those are not very developed in Denmark. They are getting more and more developed, but just comparison to Sweden, I think they're like 3 or 4 times better than us on those things, and they're not 3 or 4 times bigger or better in all other areas than us. So I think we have some catch up to do with the Swedes, just that. If I take it up to a more European broad scale, then I think we have a big problem in Europe by being a little bit too pessimistic about technology and about the future in general, maybe. And we've been living from the peace dividends for a long time now and just being very naive and not really investing in our own capabilities in terms of both our defense, but also like once removed from the defense is our tech stack. Like how can we be pressured? Our energy stack, how can we were pressured? And I think that's something we need to be better at, standing in our own right. And that can only be done by building new cool things that we can then use and call European. We need obviously new software tools. We need our own AIs. We need maybe our own satellites, all that stuff going on. And I think that's a run right now for Europe we are waking up in Europe. And I think that's really strong. And that will flow into a great time for startups, I'm sure.
Oh, I hope so. Finishing up, Steffen, what if we were to end on a high note, what excites you most about the years to come, the next 3 years?
I mean, I think it's hard not just to follow up on what I just said. I think the timing is like unparalleled good in terms of creating new technologies in Europe. There's a lot of regulation that needs to be cleaned up, a lot of bureaucracy still. But now, for the first time in like my lifetime, you would know that there's probably no party or no politician or no bureau or anything like that that's against you. It's super important that all these things work. So you will be maybe not carried in on a throne, but it's almost that type of sense that you'll have. So I think you'll see much more public money coming into different projects. You will see regulation being removed. You will see burdens taken away from small, mid-sized companies. Tax regimes change to incentivize investments. And I think all these things are extremely important for it. And I think that's the next 5-10 years in Europe. That will be the story. Out of sort of a necessity wake-up call, we need to be able to defend ourselves. Obviously, if Russia have been both richer and more technologically advanced than us, then we've been royally screwed. They're not, but we still need to keep an edge and an advantage. And that can only be done by being on our toes.
Makes sense. I said it again. Makes sense. Thank you so much, Steffen.
You're welcome.
It's very cool to hear about, of course, the overlap between being a politician and an investor and knowing the space, because I'm no politics expert. I'll be the first to say that, but just to understand the issues with this, right? Because I've seen it firsthand with the taxation of options here in Norway, and they have the exit tax, and it's really hurting the startup ecosystem. And it's, at least my view on this is that so many of the politicians, I don't know if they don't understand or if they're just catering to another set of voters. which either way is just like, you know, shooting ourselves in the foot. But of course, that's because I'm coming from the startup side. But it's I